Welcome back, everyone. This time, we'll be examining the technical outlook for Bank Central Asia, which has been showing concerning signs of an accelerating downtrend despite its long term bullish fundamentals. As you can see, the price action we're observing requires careful attention, especially for both active traders and long term investors in Indonesia's largest private bank by market capitalization. Let's start with a quick executive summary of where we stand. BBCA is currently trading at 8,425 Indonesian rupiah, down by more than 12% since the end of 2024. The key insight from our analysis is that we're seeing an accelerating downtrend within what remains a long-term bull market. This is important to contextualize. We are now at a critical support level at 8,425 rupiah, which aligns with the 38.2% Fibonacci retracement level from the major uptrend. In terms of the current correction, we're looking at approximately a 22% decline from the peak price of 10,950 rupiah. So far, BBCA has experienced 6 consecutive declines on the monthly chart. While this suggests that we may not have seen the bottom yet, such occurrences are rarely seen. Looking at this monthly chart, what immediately stands out is the sequence of 6 consecutive red monthly candles. This is an extremely bearish sentiment indicator that we rarely see in a stock of BBCA's quality and market position. The context here is important. BBCA enjoyed a strong uptrend from 2020 to 2024, moving from 4,330 rupiah all the way to its peak of 10,950 rupiah, more than doubling in value. However, we've now broken below the first Fibonacci support level at 9,375 rupiah, and we're currently at the 38.2% Fibonacci retracement level of 8,425 rupiah. This level is critical because it represents not only a key Fibonacci level, but also aligns with a previous consolidation zone. Switching to a more granular view, this daily chart reveals something even more concerning: an accelerating downtrend that's taking the form of a curved resistance line. This curvature indicates increasing selling pressure rather than a linear decline. What's particularly troubling is how previous support levels are consistently being broken and then becoming resistance on subsequent recovery attempts. This is a classic bear market pattern. We've also marked Fibonacci resistance projections based on the scenario where the 8,425 rupiah support level holds. The candlestick patterns themselves show persistent selling pressure with few signs of meaningful reversal attempts. Note the frequency of bearish engulfing patterns and the limited follow-through on any positive candles. Let's map out the critical levels that traders and investors should be watching. For support, our primary level is at 8,425 rupiah, which, as mentioned, combines the 38.2% Fibonacci retracement with a previous consolidation zone. If this fails to hold, our secondary support sits at 7,650 rupiah, which is the 50% Fibonacci level. In terms of resistance, we see immediate resistance at 8,775 rupiah, which was previous support that has now turned to resistance. A key resistance level sits at 9,150 rupiah, which was the January low. Based on Fibonacci projections, we also see potential resistance in the range of 9,025 to 9,700 rupiah. What would signal that we've reached a bottom? We've developed a checklist of technical indicators that may precede major reversals. First, we would want to see bottoming candle patterns such as hammers or bullish engulfing patterns on higher timeframes, particularly the weekly chart. Second, based on historical data, major downtrends in BBCA in the form of 6 consecutive bearish candles are rare. One occurrence found was exhausted after 8 partially consecutive bearish candles. We're currently at 6, suggesting that we cannot rule out further decline. Third, we need to see a decisive break above the curved trendline resistance that's been capping recovery attempts. Finally, a volume spike accompanied by positive price action would confirm genuine buying interest rather than just short covering. To contextualize the current correction, let's examine one of BBCA's historical patterns, which resembles the one that is happening now. The current correction stands at approximately 22% from the all-time high and has just completed its 6th consecutive bearish candle on the monthly chart. Looking at historical precedent, 6 consecutive losses on the monthly chart have been very rare. The one displayed here is probably the most similar to that of today. albeit not 100% identical. If we look closely, after forming the top, there were 4 consecutive bearish candles preceded by alternating small-bodied candlesticks. Overall, there were 8 from the top before the price rebounded by approximately 50% of the fall. Subsequently, however, the price fell again one more time before gradually rising. Based on the rarity of this pattern and the fact that the price has reached the Fibonacci target of 8,425 rupiah, we see that a relief rebound is a possibility in March. Nevertheless, this will still require a reversal pattern to be formed first on the daily, if not weekly, chart. What does this mean for different market participants? For short-term traders, we recommend watching for potential rebounds at the key Fibonacci support levels we identified. Given the strong downtrend, tight stops below support levels are essential risk management, but beware of false breaks. Target previous resistance levels for exits rather than hoping for new highs. For long-term investors, this correction may present accumulation opportunities. We suggest scaling in at key support levels rather than deploying capital all at once. Wait for confirmed monthly reversal patterns before making significant commitments. A cost-averaging strategy through this consolidation phase may be prudent given the bank's strong fundamentals. Speaking of fundamentals, it's important to note that BBCA's technical weakness comes despite strong underlying business performance. The bank maintains solid fundamentals with a 2025 growth forecast in the 6 to 8% range, though this is lower than the 13.8% growth achieved in 2024. The bank continues to demonstrate resilient profitability and asset quality metrics that outperform sector averages. From a valuation perspective, the current correction has brought BBCA closer to its historical average multiples after trading at premium valuations throughout most of 2023-2024. To conclude, as the key support level at 8,425 rupiah has been reached, we anticipate potential for consolidation as buyers step in at what represents a more attractive valuation. We've identified 3 potential scenarios moving forward. 1. Continued decline below all support levels if broader market sentiment deteriorates further. 2. Consolidation within a range between 8,425 and 9,150 rupiah for several weeks or months. 3. Reversal and resumption of the long-term uptrend if fundamental catalysts materialize. Based on our analysis, we assign the highest probability to the consolidation scenario, followed by continued decline, with immediate reversal being least likely based on current momentum. Key events to monitor include Bank Indonesia's interest rate decisions, BBCA's next quarterly results, and broader market sentiment toward Indonesian equities. If you have questions regarding this analysis, please write them down in the comments section. For videos regarding the fundamental overview of the Big Four Indonesian banks in 2024 and the performance highlights of BBCA in 2024, please click the links in the description. Thank you for your attention, and I'll see you soon.